model build of Match Group or Match.com. I'm gonna start this model kind of from scratch. All I've done so far is put in my historicals. So I don't know if you saw the previous one that we did last week of just kind of going over how to go and enter in new information that you got from an earnings report, but um, we we did all that in the last video, so you can go and check that out. As a reminder, on Mondays and Wednesdays, I do more finance stuff. On Fridays and Saturdays, I do a live stream playing normally Call of Duty Zombies with one of my friends. I had my friend Danny on the first stream. It was a little rough, but it was kind of fun. My friend Ethan on the second stream, where we finally got the voice situation figured out, and we were having a great time there. So make sure to check those out. Hopefully, I'll go and get around to starting the YouTube channel. That way, you can go and see all these. But all these live streams will be up there. I'm kind of probably do this for about an hour and a half, and we'll take some questions in the chat if you guys got any. But you guys can see my screen, and I'll just kind of walk through what I'd be doing here. Just again to show you guys, I have no type of anything in gray is a it's kind of a prediction. I have some stuff that's in blue that are like assumptions, but other than like some small stuff on the balance sheet, like keeping goodwill and long-term investments here done, or some of the modeling stuff for PP&E. I haven't really touched a whole lot of this. It's mainly historicals. This is just doing some of the cash flow calculations there. But yeah, for the most part, it's blank Excel sheet. Have all my quarterly data. So we're gonna go and get started by modeling out. I think I'm gonna start doing subs first, and then have that feed into our revenue over here. I think I'm just gonna do total revenue. I think I'm gonna keep indirect revenue kind of growing at some rate, probably, or keep it at some percentage of total revenue. That seems like a better way to do it now that I'm thinking about it. I don't think I'm gonna directly model out Tinder revenue, although I'm not sure, only because I have like a couple years of what percentage of it is. I could grow it out a little bit more. It's just if I want to go and do kind of a blended ARPU approach, like you see over here. This is just general ARPU. This is all the direct ARPUs, and then I have like 1 year of Tinder ARPU. So I'm just kind of struggling with which way to go and do about it. I do want to model out subs first because I always like doing revenue based off of an ARPU approach. Normally, kind of doing an average growth rate for subs, unless I have an outstanding thesis on things like, for Spotify, it was premium users are going to outgrow free to stream users. So for this one, I think one of my big theses is definitely international users are going to pick up more than domestic users. I haven't seen any data for Tinder about what the share of international to domestic ARPU is. So that's why I'm kind of hesitant about going and just doing Tinder ARPU and just probably doing North America and international ARPU and having that all flow back into the rev statement, and then just maybe make an assumption like how here we got the last fiscal year, it was 57% of revenue was Tinder. Maybe I have that growing a little bit just as like a tracker to go and see like, oh, is Tinder revenue growing as much as I think it is? Probably what thing I should mention is Match.com, ticker symbol MTCH, owns a lot of dating brands throughout the world, a lot of those mobile apps, Match.com, of course, OkCupid, Hinge, Tinder, as I've been talking about. So they own a lot of those properties, and so this is their company. You can go and find all their information out there on their IR sites and all that stuff. But yeah, I think modeling out ARPU the way I just said, of just focusing on international and then doing just a blended average for the total ARPU will end up being better than trying to dive Tinder into there, but modeling out subs, I do want to go and model out subs for Tinder too. Just gonna keep that in there as a growth tracker. I think they'll wane over time. I think Hinge will go in, take over a lot of those. Though we got downloads, we didn't really get users or subscribers in the last update, but I could be wrong. Just kind of, maybe they released one of their investor presentations. I did not see it the last time I was on there a couple weeks ago. Yeah, they did the shareholder letter. They did not do their typical presentation, which I really liked when they did their presentations. Their little slideshows, they were extremely helpful in building this out and just getting more information, because that's how I kind of built this all this stuff is purely from their slideshow. Yeah, we'll go and see. We'll go and see how this works out, though. This should be kind of interesting, because I mean, the thesis I have looks to be on trend of more international revenue conversion. That's why I did at the beginning the direct of revenue for North America versus international. I should have done this a long time ago, actually. Now that I look at this, this was a huge mistake by me. Just even probably modeling out this is a mistake, just because it'll probably be too much of a look-see, I guess. Just like, I probably should, if it's only going to be like 5% of revenue, then I really shouldn't care about it. But just for modeling purposes, yeah, it's gonna be like, I might as well just cap it at, I'll just do my first assumption here and just make this just 2% of revenue as a whole. Oh no, because then they'll feed back in. Oh no, it's growing not that much. It's gonna be so insignificant. I don't know, I may play with the growth rates. May just have it grow maybe 1% a year. Maybe if that. It grew less than that previous year. It's like, yeah, maybe just have a 1% negative growth rate for it as the CAGR, and just put that out there and see what that gets us. In all honesty, that may be a good way just to do that. I typically, like, if there's some other one, I try to not pay too much attention to it, especially if it's like this situation where you're talking sub 3% of revenue, sub 4% of revenue. Like, it's pretty inconsequential. For Bilibili, though, that's kind of weird because they tie in their e-commerce business line in with their other. I don't understand why, but eventually I'm sure once e-com becomes a lot more than the other, they're going to split it out. But it all depends on the company, which is also what kind of inspired me to do this series. Was in college, we never really had the modeling class I took. It was always kind of a class on modeling these hypothetical companies, and I'd always go and try to apply those and figure out, okay, this doesn't really fit most of the real world companies, and we can't just go and do the same assumptions all the time, or just do a percent of rev build. It's kind of doesn't really help you out once you get to these real deal companies. Oh no, look, I'm already screwing this up. Come on, I can do a basic growth formula, right? There we go. I'm trying not to embarrass myself too much on the stream. and in the series for future times. Oh, that's right. I forgot. This is a part of Dating Rev. Okay, yeah. I completely forgot that. Another thing about doing these is you learn is that companies throughout time also change what how they qualify what revenue is, because back they used to have non-dating revenue way back when I made that formula, and yeah, coming back to haunt me a little bit, but nothing we can't fix. So yeah, guys, you see here I'm just kind of setting it up so that all my revenue is going to populate. Once I do all that, setting up the first one so that it does a growth rate. Just having all that set up so that when all this populates, it's nice and smooth. Like I said in my previous video, I'm trying not to really complicate this one. I try to keep my rev builds most of the time I try to go and keep them not too super complicated, just because they do become just absolute bears to go and yep, look, messed it up already. That's what we're trying to avoid with having quarter and fiscal year. I do this to myself all the time. There we go. Cool. We'll set that equal that divided by I know some of you Excel sticklers out there will go and tell me, you could be doing this a lot more efficiently, and I know I could be, but that's just me. That's just how we do it. Bruni, I'm not using a mouse. I will go and say the only part that I do like using a mouse for, though, my dude, is doing large format painters. Like if I was to just format paint this right here, I will go and use it. Oh, the follow right there with our little emote too. If you saw that, thanks for following, Bruni. You see, I set it up for the little stonks, for the stonks thing to come up. So I got the viewer count over here and all that stuff over on my. I got it set up on my other monitor to go and see all that stuff and see the chat. But yes, I will try not to use the mouse. You will see me slip up and do that though. But if you have been listening, maybe you can go and hear that I'm trying to use the keys as much as possible here. So I'm not doing uber complicated stuff at the moment. I do like that you had to go in and say that though. That was fantastic. I'm just waiting for that's something that I'm kind of afraid of right there, Tom. The meme is top. I did love doing that. Once I get enough followers, I can unlock subscribers, and I have the subscriber a little animation as Gordon Gecko, like on the phone on the beach, and then I have if you donate, it's the Fed goes Burmy, where like the guys like doing it. I don't know if I can test it right here and show you. If on my end it'll show as well. Oh, there we go. There we go. You can go and see it right there. That was just me just testing it. Love it. Love it. Just absolutely love it. That's this is what's gonna be on the I hope so too. I hope so too. I this will be on the zombies stream here in the future. It's gonna be dope. That whenever someone follows, they're just gonna see that. It's just gonna be on the corner of the zombie screen. I finally get that set up all on my end to be able to do that. Okay, what else do we need to do? Just some growth rates for these guys, and why don't I just put some pen to paper, put my head in the game here, and just copy and paste the formula. I want to be like a Davey Daytrade. I want to put pen to paper, pen to paper. Okay, doing the ARPUs here pretty soon. That's all gonna probably come from the other tab. I'm gonna just self-populate this from when I actually figure out EBITDA. They do just do GMs, right? They don't break it out. Yep, it's just that straight GM. Maybe I'll come to GMs later. I'll probably try and keep. It looks like GMs are sliding quite a bit every single year. Just like averaging out at. Yeah, they seem to be falling by like 200 bips a year, which is kind of appalling, seeing as it is Tinder. It's mainly an ad-based, premium service. You would think for some of these that they would have a lot higher gross margins. I mean, I think when they start out on the quarterly standpoint, yeah, it was upper 80s. I guess they gave way to a lot of the acquisition costs and stuff like that. So you know what? We're just gonna already just start by just doing fading GMs probably like a basis point. A year. That seems fairly logical to me, actually. Of course. Probably, no, not, yeah, maybe a basis point here would be. Seems a little logical to me. Meets kind of a little less than the slide that they were doing, but still somewhat significant. Yeah, I mean, terminal out year there. Yeah, seems pretty decent to me. GM, that means, man, how do I go and calculate this? Keep all that out of the way. This will just be ooh. I'll double check that. Actually, we'll just double check that right now. Oh no. Oh, I messed up. I always do this. With this is why sometimes you gotta use the mouse. Because I will go and sometimes just drag myself down to 0. Yep, there we go. Cool, cool. All right. So that's all set up right now. Maybe I will just go and just throw out some, like, maybe Tinder becomes, I don't know, adds a basis point a year as total percent of revenue. We can just go and mull that out a little bit and just maybe see, okay, what if they do grow that by much, how much that would be, and how much as a percent of rev that would be. And then, like, later on we can go and see how wrong we are. I don't care about the year-over-year growth because it will be, well, I do care. I just know it's going to be a little bit less than whatever top line rev does. So, okay, so that's pretty much, rev build is pretty much built in a sense, in that all we need to do now is just figure out ARPU and subscriber growth, and then all that will go and come over. So I will go and just pre-build that right now. So that's our ARPU. We need to use our nice green color. FC, of course. Oh, for future reference too, if you see at the top here, it says match Q1 2020 Twitch 1 beginning. I'm gonna save. I always save it at the beginning, and I'm gonna save. Whoa, actually I should have saved it right there, but I'm gonna make another one called end. I actually can go back and redo this because I have a little thing here. I have this, which is the same file. So I'm gonna have a version of the beginning of the ending. That way we can go and see if you want to go and grab the Excel later on or whatever. You can have the beginning version, you can have the ending version. You can follow along, and if you want to rewatch it or whatever. That way, like, also every time that we do this, it'll start back up as like a new file, and yeah, we can have a grand old time together. And also just kind of helps me guide myself to, if I work on it like during the day or some other time, I can go and say, okay, yeah, here's where we are, and here's where, like, I've been doing it on my own, you know, outside of the stream. Okay. Now to do some sub stuff. Oh, I probably should have. I also did the wrong cell references for these guys. It should be instead of, should be one down, because this isn't actual, it is calced. So W15 should be W14, right? W15, no, W16. Oh, come on. It's like late in the day too, I'm like, It's kind of hot in my room. I need to drink some more fluids, get my focus back a little bit. No, FactSet, no. I don't even have FactSet anymore. I should probably just delete all those things, all the links and all that stuff from it. I hated using FactSet. Hated it, hated it, hated it. Terrible system, just terrible system. Okay, back to our subpage. just going to start off by making all of the things for when we officially do net ads. All of our fun little growth rate stuff. Our net ads, which net ads, I will get to the newest quarter typically. Typically sub growth, it gets weird because like your fiscal year end is always your 4Q, so that's where you always like it's hard to go and do year over years. Actually, I should do year over year growth. Yeah, I keep year over year growth there, but net ads is like the last quarter. Although it's net ads yearly, so I do fourth instead of that. That's why, like, when I first started doing sub-based companies, before I became the TMT man, it was kind of really weird because, like, I was modeling things based off of like other straight rev companies and not realizing how to do subscriber metrics and all that stuff, and it was tough to learn actually. And then just carrying the formulas over, you know, like we always do. Nope. I definitely screwed that up. Boy, did I screw that up. It should be there. Because, yeah, right? Yeah. That adds, yeah. I just simply screwed it up the first time. Copy. There we go. No. Ugh. I do not have my F1 key popped off. I'll be the first to admit that. The reason why is because when I program in R, the F1 key is actually really, really helpful versus in Excel. I do wish I could have a keyboard where like the F1 key was off to the side, that would help a lot when not having Excel help come up all the time. Okay. I don't know, should I keep the viewer count down here? I feel like it should be someplace else, but I don't know where, because it's like sometimes I'm using stuff over here. I have all the other stuff is like off to the right hand side of the screen because like that way it can't get in the way most of the time. Like my face is down here because I know it won't get in the way. Maybe I'll move the viewer count over just a tad. I don't know, I didn't move it at all. I don't know what other things occur future on, but I'll maybe move it in the future. just continuing on here. Just building up so when we do our subscriber growth rate, which we will do here pretty soon, all this will populate and it will be nice and shiny and fun. Tom, I'm waiting for you to start a Twitch channel that is just you doing like technicals and stuff. That'd be pretty dope to watch. I know in the past some people have done like Twitter Live or like Periscope or like Facebook Live and done stuff like that, but I don't know like if anyone directly has done like a Twitch like technical analysis ones. I know there are some people on Twitch that do like TradingView has a live stream aspect to it. I did not know that. I don't do TradingView though, so I wouldn't know about that. I'm also thinking about adding music to the stream maybe. Oh my god, my cat's making noise. Let me go deal with that real quick. But I've been thinking about adding some music to the stream too, maybe some lo-fi hip-hop beats. I feel like that'd be fun. A nice harp to the natural ambience that comes with Excel modeling. Yeah, there's a gaming Twitcher that made this entire Spotify playlist of like his own stuff that he does for like. He also creates music, and it's like he non-licenses it, so like you can stream it in the background of like your stream. I just have to pick a day to like do like a remote test over here, like I record one and then like have like I said, I feel like the lo-fi hip-hop beats in the background would be dope. That's what I normally do, like when I'm modeling or like during the day. Like I know there's like Bloomberg is on in the background, but I never have it on. I normally have it on mute unless like on Twitter there's something that I see, like there's a segment that's interesting or people are talking about, then I turn it on. I can never like have Bloomberg or CNBC on all day. I would go crazy. But yeah, maybe some lo-fi hip-hop beat stuff. That would be kind of dope. Alright, now it's time to do a little sub growth. Tinder, I know I'm not going to count them in total. I do think they probably slide. They probably slide maybe. Because Tinder Gold, I also want to go and say like they probably have a built-in. The client as Hinge takes some people from Tinder and whatever other dating sites Match will eventually go and acquire. So I'm going to start them off at 25% year-over-year growth and fade that by a basis point every single year. I mean, having 14% market share of all your subs is not stupid bad. I mean, having 40% growth, because that would go and be. Why am I even doing that? I should be doing a growth rate. There's 1 plus. There's a growth rate for you. And yeah, it looks like a lot of net adds from Q4. Because it's also a growth rate from an entirely new size. I don't know, them ending up with 50 million subs at the terminal year seems a tad aggressive now that I'm looking at it, in all honesty. I mean, I think they're gonna be the engine of dating in the rest of the world and the entire world, but I don't know, 50 million subs. Seeing as this for mostly Tinder use has been primarily US, I mean, 6 million subs is 2% of the entire US population, so that can make sense actually. Yeah, because there's global users, so 50 million subs. I mean, they've doubled from fiscal year and 17 to now, and I have them doubling in 3 years. It's a pretty robust growth rate, but I don't know. I might go and fade it down sharper. Once it gets to 20%, start fading it down to just 2 bips. Yeah, already 8 million subs less. 8% growth. Somewhat more decent, more respectable, I guess. Okay, so we got that done. Which here pretty soon. We already have Tinder Direct Rev, right? Because I said it was going to be a portion of Direct Rev, so we could actually right now do our ARPU calculation. Alt H to delete that comment, because yeah, love those custom tabs up there at the top. Let's just double check that. Divided by subbuild W24. No, the AB22. AB22, dope, yep. Currently only doing 6 cents in ARPU. But that's also because it's the percentage of rev is based entirely on other and not any type of other revenue. So I would expect it to be that low. Sorry, something just caught my attention on Twitter. It's a pretty active Twitter night. I guess since I mentioned Twitter, you guys can go and find my Twitter in the info page on Twitch. Okay, so I guess starting off with North American subs. I actually think North America is a pretty saturated market for Twitter. I mean, average year growth rate last year was about 9%. Before that, though, it was 15%. I think they'll probably grow somewhere. Oh, I did it again, or I didn't need to go and do something like that. I think maybe using the same Tinder model would be kind of better in a way, where I don't think that they're gonna. Oh, the amber shift is starting to occur on my computer as it gets darker outside. I just noticed that. It was kind of abrupt. I don't think they're going to go 25%. I'm thinking more I'll be kind and give mid-teens growth. I mean, well, like mid-single digits growth. With it going down by like a tenth. With the out year being, it seems a little low to me though. Maybe by a tenth of a basis point. 3% growth terminal year seems pretty decent for North America. I could totally be wrong here too. But where I think the growth engine is international. So I do love, however, that already Tinder is 156% of new subs. It's actually kind of funny because my Tinder growth rate, I think, is going to be almost dead on for international, although I do think international will have a much bigger boost. Also, this is probably wrong. I probably need to really decrease Tinder now that it's 93% of users. I don't think that that's going to be possible at all. But I'm still using the same growth rate, so I shall fix that here shortly. Looks like average for the last 2 years is mid-30s. I honestly don't think. I think maybe same methodology is fine. It's just I think it continues to grow more accelerated into like the back half. There, I think. It's a pretty high growth assumption, but I think for demographic reasons and for cultural reasons, international have higher we'll have a higher growth rate regardless. It does make my you know what, that's why. There we go. I was like, why is my top line growth so lumpy? And there's a reason for it. It's because it was doing the formula completely wrong. Alright, so we have our subs. I kind of gave the reasons why. I think some of those growth rates can occur. I'm pretty much starting off from like an average of the previous years, and then either pretty much raising them or lowering them, depending on underlying thesis. International, I think, is where all the growth is, just because, like, for a lot of cultures out there, particularly in the Middle East and in Asia, going from arranged marriages and things like that to figuring out how to date, I think, is a huge seminal switch. So I think that's probably why they continue to have strong international growth and why they've seen such strong international growth in the past. I mean, they exceeded at the start of 2000, midway through 2019, they exceeded what North America was with a much more significant head start. So, okay, now down to ARPU. I'm going to leave this to be I remember if I just did the average function on the last one. I think I normally do average, yep. So I'm going to do that for the same for here. Equals average of u and u. That way I only have to predict 2. And the average will just be the average. And if we remember right, that already self-populated. So I will go and do all the year-over-year stuff. Just copy this and paste it there. Let's do the same for the other ones as well. This is actually kind of interesting how North America is typically a more premium market, but I think that'll probably switch halfway through. I think you can find some decent ARPU growth, specifically since they just started monetizing Hinge. I believe in the sub page I have the mark for right here that they rolled out Tinder Gold, and in Q3 17. So right here you can already see like Tinder Gold's kind of helped raise their ARPU quite significantly over the years. About 5% over the past 2 years. That's just Tinder Gold. Now that Hinge kind of has started monetizing, I think you'll see the same sort of thing in North America, and then kind of international. I think probably international ARPU rates will do single digits up until you start seeing, you know, the monetization happen over there more abruptly. So we shall go and do that then. Oh, now I'm having second thoughts on doing a ARPU based monetization revenue model. Maybe I should just go and do. Nope. ARPU because I've already done subs. And you can go and see here, my calculated versus the actual is a little bit different. About 5 to 3 cents different. That's because I'm calculating ARPU like the way it's just average revenue per user divided by previous. Some of these are currency adjusted. Some of them, they have probably a better idea of what the average users were and stuff like that, so that's why they're a little bit different. But I will be going off of, for my growth rate, I'll be going off of the last year's ARPU number. I'll actually go and grow that by, I'll actually add in a new tab just to make this so much clearer for me and for everyone. That way when I look back, I know where some of the stuff is coming from. And I should have just done this one from the start. There we go. Now we can all see where growth rates are. I'll make it easier to model out. So I think this probably grows 2% for a decent number of years, and then it probably starts trailing off to be about that same year-over-year growth. 75 cents worth of ARPU. Still kind of low, actually. Maybe I up it. Maybe I'll give them a little 4% instead of the 5% growth that they were doing for a couple years. And then start trimming it down instead. See where that gets us. So that's essentially saying they're gonna grow revs at 4% per year. Maybe make it 4% for additional year. I'm trying to get the out year to be $1. I could just hard code it, but I actually think that's probably maybe give them a little bit extra. Maybe give them your 6% growth, your 5% growth, 5%, 2 4s, and then start trailing down, and that gives us 1. Exactly how fun. I know that's kind of subjective, but I mean, for the last year they were at 4% to 6% growth. So you gotta remember at the moment now, North American ARPU will include Hinge, which just started monetizing, so that will add up there as well. Now international ARPU has been a lot more bumpy for their growth rates. You can go and see here, it's just bump city. They'll start off huge and then like have like a 10% year, then have like a 0% year, so that's tough. I think maybe starting off at 3% and then having it grow by 50 bips per year. Not like that. And then maybe by 4 years out, instead of it growing 50 bips per year, it really starts accelerating. I don't know, let's see what that looks like in terms of ARPU. Oh, same thing. This is why I know I shouldn't go and have quarters and all that stuff mixed together, but I end up having it. Actually, maybe I'm doing a disservice by not having the acceleration start sooner and then fading it back down. Then once it reaches 10%, have it start fading back down. That's kind of the same thing that the US struggled with, but still having above US growth and then having it about 25%, like about a quarter higher of ARPU. That could work. I feel like that could work. I'm gonna check on the Twitch page just to go and see. Oh, could hear myself there for a second. Okay, dope. It does have all my correct stuff. Awesome. I'm still just like quasi paranoid about like not having everything correct on Twitch and making it look you know what I think the user count, the viewer count may shift. I think we're tucking it down over here as it's getting in the way with some other stuff. So okay, now for the real deal stuff. We go over here, we've got all of our ARPU. Man, I'm gonna be able to go and do revenue and gross margin in about an hour with some explaining and with some shenanigans along the way. That's actually a lot faster than I thought I was gonna go. I'm also just like trying to see like if this is a good zoomed in volume or not. So like on my like other screen, like the screen size is like maybe this. So I don't know, maybe keeping it at like 120, you guys can actually see all the numbers and read the numbers. I don't know. Tom, earlier in the stream, were you able to read and see everything pretty decently, or no? Or should I have zoomed in like I am right now? And then, so to go and calculate your direct revenue, right, your North American revenue using your ARPU. You do ARPU. I sometimes always forget how to do this. I have to like reverse you ARPU times your subs times 100, if I remember correctly, was the discount factor that I used for previous ARPU. Calculating, yeah, divide by 100, so you just times it by 100, and that's what you get. So then you can just carry that all across. Oop, wrong line. Oh, did I do the big nasty of this? Should probably be times. It should be times 300, 400, because it's the, yep, times 400, because I was doing it on, how I previously was doing this was, here's another thing with doing subs and stuff like that is if you're calculating ARPU, if you're doing it by quarter, you always have to do it by quarterly revenue to go in for the factor, for the division to be correct. And then if you're doing yearly, you gotta times it by 400 or whatever your other factor is. It's normally like you'll go and divide everything by 3, whatever your revenue is from your revenue. You'll divide it by 3 for quarterly, and if it's like monthly or stuff like that, or then you divide things by 12 to go and get it all to be kosher with each other. I know for cable companies, they like to do like monthly ARPU and stuff like that, so you really gotta go and do all that stuff. But no, the revenue growth now looks exactly like it was earlier. So I'll just do this, do that, just double check sub build W8. Oh no, it needs to be W10. Cool, there we go. Oh, pretty aggressive year-over-year revenue, if I do say so myself. 40% year-over-year. Oof. I mean, 2018 was pretty high up there at 30. Probably gonna have to really dim that down, in all honesty. Because that's pretty high now that we're looking at it in context, especially with that big jump and then like it smooths out. And then still growing 19% in the out years. Pretty tough to swallow. But the trend right here of international becoming a lot more than direct is exactly how I want it to be. International becoming a lot higher total percentage of revenue is exactly what I want it to be, so that's good at least. Yeah, then it looks like gross margins all calculated correctly. so dope from a standpoint other than tweaking our growth rate, which let's just double check that it is on the right thing. Yeah. Other than tweaking our growth rate, I think we, and yeah, it's all coming from the 50% increase in revenue from international. So we probably got to go and adjust our ARPU quite significantly, from 4%. That was that big of a jump from 4%. Huh. It's kind of wild. Let's do 3.5 and see what that goes and gets us there. Still quite high. Still quite the jump. I mean, I did calculate at 52, so let's just go and see. What happens there? That isn't making sense to me. Sorry guys, I'm not talking. I'm just trying to figure this out a little bit. I'm trying to also think like 50% is even like super acceptable to me. Overall growth rate of 37% is super rich. I think I may have to take down. Probably definitely have to take down ARPU in the US quite a bit. To like 3.5. Oh. Come on, formatting. Sorry, Tom, mouse alert. What does that get us to? Ending 80 cents per RPM. Not great, not terrible. I'll raise this up more to 2%. Ending at $1 there. Still high right here, but no, it kind of seems fair on an ARPU basis. But just so I understand, I can put it through my thick head. Yeah, that was quarterly instead of yearly. Yeah. I'll stick with it. And if I turn out to be extremely wrong, I'll change it. I'll probably give me a lot higher valuation, but can always use a higher discount rate too. Okay. So revenue build, besides from EBIT, which we'll do from, because to go and get EBIT, you need a lot more stuff to go through the income statement. We'll get that later. We'll get EBIT later. But overall, revenue build is done. Sub build is pretty much done, which is pretty dope that we got it done that fast using some pretty basic assumptions, but I don't know if I should go on a little bit more or not. I guess I'll just go through here real quick and just make sure some things are correct. Yeah, stuff like the beta and the whack and all that stuff like that are completely wrong in terms of values, because the 10-year treasury is not at 2.59%. That's for sure. But I guess what I'll start doing is doing some of... I need to expand more columns here. And I'll just do that by taking this all the way down to the studs. Just doing a nice little Control R. I think I have up until 2031, yeah. So I think for what I want, I may do the rest of the income statement. I'm not sure yet, because I know what's going to happen is I'll fly through the income statement. We'll start getting to the balance sheet. It's not going to balance originally. So I'm going to be like, okay, we'll finish the cash flow statement. And then when we finish the cash flow statement, it will be close, and I'll probably still have to go through and find like the one accounting mistake I made to fix the balance sheet. And I don't know if I want to do that at the moment. Yeah, I think maybe just having all the statements be done in the next video would be pretty helpful, because right here's like all the prep work, then that's like kind of doing the meat and potatoes of your model, and then like if I need to do like any type of troubleshooting or anything like that, I can take a day or whatever to do that. Then we have a day on the stream. The next stream will be on maybe doing all the panels, and then finally doing all of our price target stuff and possibly our charts as well. I feel like that's a pretty fair schedule. Maybe it'll probably be like a 4-parter at the very most, all about an hour. I mean, we're at about an hour right now, even though we're getting some more viewers. I think that will be the plan. I may just end up doing the income statement just to get it out of the way. Then that way it's up. And then maybe we do the video of doing the balance sheet and the cash flow statement, and maybe the panels as well, because that'll go together, and then do go and do all of our valuation methods and our charts. I think that was probably going to be, that'll be better. I'll just suck it up and do the income statement right now. Okay, so top line here, our revenue. What we're going to go and do is just take our revenue from our revenue build, line up the right numbers, and then that way it just kind of carries through. This is incorrect right here because we did it on the revenue tab, so we will fix that. We'll fix that by going down to, actually, we'll do COGS, because COGS, and then we'll let everything else kind of do our right coloring scheme. We'll make sure all of that calculates correctly, and then we'll do gross margin. Cool. Okay, so that's all worked out. Here's one where I kind of go, for calculating these, I typically do historical averages, and then like for some things like no well-established social media company should have like above 20% sales and marketing. There's just like no reason, because your customer acquisition costs should go down over time, especially if your brand is becoming more well known. So that's one where I'll probably sit here and do something like this for the entire time. And then look, it gets down to mid-teens, which is perfectly acceptable, I think. If we pull up Adam, if we pull up like Facebook, I think they're, oh no, you can't do SG&A as a percent. This is also one of the really cool things, is their sandbox feature where you can go and type in things. Yeah, but they don't go and break it out. But I want to go and say like Facebook's is pretty close to being like that similar type of mid-teens sales and marketing expense. So I think that makes sense. Gross and admin, we'll just do historical average for that. I mean, and a big thing about doing like this style too is you can be wrong doing it this way. You could have one year where they go on a massive cost-cutting spree, and you adjust it, but like I'll pretty much always do historical averages. Like for R&D, fine, it can be 10%. I don't see anything wrong with it being 10%. It's been 10% for the last 3 years. Looks like they found their groove there. Same with, although depreciation, I do from down here, its own little separate tab. It looks like typically depreciation was 53% of previous year's SG&A. I mean, not SG&A, of PP&E. So we'll keep it that way. And then the formula should work out. And it's going to be the same thing with intangible assets. I'll just do a historical average, 4%, which was coincidentally previous years. So then we go up to your income statement. Everything is nice. Whoa. I really have them really grow in EBIT substantially, don't I? So you can go and see here. Well, I am only taking down. That's why. That's exactly why you're getting EBIT growing so much, is because I didn't catch this, but our depreciation is negative. We can't go and have negative depreciation, now can we? And let's see if the same thing holds true for amortization. No, it's just very small. I don't think I amortized all the assets down the entire way, so. Yep, I should have caught this instead of just having it be the formula. Wow. Because as it flips over from the negative capex, from capex being that big, it because sales are growing so fast, it just consumes itself like a dying star, and then depreciation gets all out of whack because there's nothing to depreciate. Maybe we go and change how this is calculated instead. That way we don't run into that issue. That would definitely solve a lot of our problems. Maybe what I'll do is this instead, though. I'll save this for a troubleshooting thing where I go and do it tomorrow. And while we're still live, I can go and do something else. I'll just go and this is typically what I do to you guys when I have an issue. I just highlight it in yellow. And it will be like over here, fix so as to not be negative. And then that way, like, I'll go back and fix it, and that'll be the first thing I show you guys. Will be me fixing it and me having a slight clue as to what's going on. Non-GAAP EBIT stuff I won't go and do. Interest expense. That is calculated in another thing for our interest expense, which is our debt schedule right here. I have them paying off a certain amount of debt. I'll probably fix that later on. Actually, things that come from other places in the worksheet are black. Others net. I don't think I have an others thing. I think I could just do a quick. It goes negative to positive. I'll just maybe just keep it just assume that. No problem assuming that, I guess. I don't know. Some people don't even calculate the others, or they do it as like a percentage of sales or percentage of EBIT and just keep it that way. But like sometimes, and even in like some of my old models, I'll have like it be huge or small or negative or positive, and that'll deeply affect some of the values. How are these being calculated? Equals, I have some type of a hidden thing over here that is calculating them. Yeah, they haven't discontinued a lot of things in the past year, so I guess I'll just make that 0. I can go and agree how to go and do this though. This makes sense. I'll actually just do average throughout the past couple years, and it ends up being virtually the same. I think the other one was negative instead of positive. Margin should be, I mean, yeah. This all will be fixed once I fix the depreciation, because obviously, like, you can just see right now, if I just even do like a plus, it cuts our gross margin in half. If I just say depreciation doesn't even exist, we're at 40%. So, well, that's with it just not even being a cost. So, we're probably gonna have 36% terminal margins, maybe. So then, yeah, then we lose another 8 bips along the way once it all flows down. So far, not looking, actually, on a net income standpoint, not that bad. Shares, I don't think I've done anything to shares yet. That's our, just our EPS builder right there. Like I said, I'm not doing any of the non-GAAP stuff. That's mainly tracked previous years. So, then maybe I may go and do it now that I think about it, to go and do SBC purposes for the cash flow statement, because that could be really handy to go and do. How much? You know what? Screw it. Let's just go and do it right now. And what I will go and do though is I will go and then I'll just hide those later on, because we don't need them. And look, they're extremely small numbers anyways. Sales marketing. So I can just quickly go and do all these formulas. Whoa, that's actually a lot bigger than I thought it was going to be. Well, I guess it's good that I did it then. Yeah, I do know those when I did those things. Same. I'm actually not going to be a huge stickler on formatting for this one, because I'm just simply going to hide this cells anyways. It doesn't really matter, especially for like a small little calculation like this. Oh boy. You can also tell I'm getting tired because I'm talking less and less and less. So I'm just like, let's just get this done. Alright. Pull all of our formulas out there. Add this in. Actually do the proper formatting here. And slide it along. Cool. Find our rows we want to hide from the world and from Twitch. Hide them. Boom. And now we should also have, oh god, our non-GAAP EPS done. Slide that on down. Slide those on down. All right. And we're done for income statement. Pretty darn easy, actually. Pretty darn fast. Also, Match Group has a really simple income statement, so that helps a lot. Like I said, I will go tomorrow, go through, fix this. I will address that tomorrow on the stream, and I will go and tomorrow when we stream, I'll do the balance sheet, cash flow statements, and polish up all of these unless something goes absolutely haywire and I need to redo everything. But thanks guys for watching. Make sure to leave a comment on any of the stuff that you like. I do on my Twitch page have a suggestion box if you want me to go and do anything that you want to go and see differently. Maybe like hear some music. Oh, you need to zoom in more on the Excel sheet, things like that. Please drop them. Love some constructive criticism. Make sure to follow me on Twitter. And once again, for the streaming schedule, Mondays and Wednesdays are us doing financial modeling and investing type stuff. And then on Fridays, it's me and a friend playing zombies, doing a Q&A every 5 rounds where we talk about your hot takes, your unpopular opinions, your stock questions, your investment questions. Tom had some really good questions that he was answering, asking about like work from home. Saturday on the stream, that was a lot of fun to go and do. So I guess I will see you guys next time.